Hello guys, welcome back to the Indian Value Investor. I am Suraj Subramanian, your investment guru. So today's video is about motor insurance or vehicles insurance. Many times I get questions like, why does my vehicle's insurance premium rise every time? Why doesn't the insurance company pay the claims in full? What are the coverages under my vehicle insurance policy? So if you also have these questions in your mind, this video is made just for you. Watch this video till the end so that you get your answers for all your questions about motor insurance. Vehicle insurance can be divided broadly into three main categories. The base or the first one is the third party policy. Just above that comes the comprehensive policy or the package policy, and the one above that is the nil depreciation policy or the enhancement policy, which is commonly called as bumper to bumper policy. Now, this third party policy is called the most fundamental of all vehicle insurance policies. Now, let us try to understand what is a third party policy. First question is, what do you mean by third party? Who is a third party? The first party always is the customer, which is you. The second party is the insurance company with whom you are getting into an insurance contract. The third party is everybody other than the first party and the second party. Damages caused to third party can be of two types: the personal injury, the third party personal injury, as well as the third party property damage. The property damage is nothing but when your vehicle damages properties of other people. Say for example, if you damage cars or buildings or any other property for that matter of other people. Let us understand how much your policy pays for third party personal injury and third party property damage. Suppose your car meets with an accident, thereby killing a person who is earning around 50,000 rupees per month. Let's assume that he is a youngster and he is likely to earn for another 30 years for his family. Your policy is very likely to pay at least 50 lakhs to 1 crore rupees as awarded by courts these days. Motor Vehicles Act mandates that every single vehicle running on Indian roads should be insured at least for third party policies. As far as third party property damage is concerned, insurance policies have sub-limits, which means that there is a certain limit up to which your insurance policies will pay. For example, for a car or a commercial vehicle like a bus or a truck, there is a limit of 7.5 lakhs for third party property damage. On the other hand, if it is for a two-wheeler, the limit is only 1 lakh rupees. Not just that, your third party policy is also accompanied by a personal accident policy called the compulsory personal accident. This gives you a cover of 15 lakh rupees for the owner driver of the vehicle. So this means that if the owner driver of the vehicle meets with an accident and unfortunately dies in the accident, his family will be eligible for claiming 15 lakh rupees. On the screen here, you can see a sample policy copy of a harvester vehicle. You can see that compulsory personal accident coverage is given for this vehicle. Insurance regulations say that if you own more than one vehicle in your name, it is sufficient to take this compulsory personal accident cover in any one of your vehicles. Likewise, there is also an optional cover of personal accident for co-passengers as well. This optional PA cover gives you a coverage of up to 2 lakh rupees for passengers and co-drivers. This 2 lakh rupees limit is for cars and commercial vehicles. Whereas in two-wheelers, you can get a PA cover for passengers for a limit of up to 1 lakh rupees. As these are optional covers, you have an option not to choose these covers as well. A lot of people ask me as to why insurance premium for vehicle is increasing day by day. The reason for this increase is that IRDA, which is the regulatory authority for insurance companies in India, revised the third party rate for different vehicles yearly. As courts award third party claims based on a person's income, and income of people generally are on a rise year after year, the third party premium rates are also very likely to rise year after year. Please note that third party premium rates are fixed across all insurance companies and none of the companies are allowed to give a discount on third party premium rates. Now let us try to understand the package policy or the comprehensive policy. If you can call third party policy as a dosa, this comprehensive or package policy is like a masala dosa. This means that the comprehensive or package policy also includes the third party policy in it. All this while, the coverages that we talked about was only about third parties. Now, what if something happens to your own vehicle in an accident? This is when a comprehensive policy or a package policy comes into play. Now, let us see what are the coverages under a package policy for a vehicle. Contrary to what people generally think about motor insurance, almost everything, every type of accident is covered by your motor insurance policy. For example, if your car catches fire, that is covered. If there is a riot and somebody breaks your car, yes, that is also covered. If your dog scratches on your doors and it gets damaged, yes, that is also covered. If by mistake you dash on another car and your car gets damaged, yes, that is also covered. If your car gets stolen, yes, that is also covered. So basically what I'm trying to say here is that almost all accidents which are not deliberately caused by you are covered under the motor insurance policy. Having said that, you should be aware that you should be having a valid driving license and all the vehicle documents should be in order so that you will be eligible for claiming your vehicle. IDV or the insured declared value is a terminology that you should understand and which is very important in a package policy. Insured declared value is nothing but the value of the vehicle as declared by the owner of the vehicle. Even though the name suggests that it is insured declared value, there are certain regulations as laid down by the Indian Motor Tariff as to how you can arrive at the IDV or insured declared value of your vehicle. Shown here is a chart for depreciating your vehicle's value and arriving at the insured declared value. For example, there is a brand new car for an ex-showroom price of 10 lakh rupees. The IDV of the vehicle would be 9 lakh 50,000 rupees after deducting 5% as depreciation. Likewise, if the vehicle is older than 4 years, the depreciation as per the chart is 50% and the value IDV of the vehicle would be 5 lakh rupees. It goes without saying that the premium paid for the vehicle is dependent upon the IDV of the vehicle. Higher the IDV, higher would be your premium as well. Unlike the third party premium, insurance companies have a certain amount of discretion as to how much discount they can give on the own damage portion or on the vehicle's premium. Nextly, let us try to understand what is NCB or no claim bonus. Insurance companies give a discount to their customers that do not make any claims in their vehicles. This chart shown here shows how much NCB discount that a customer will be eligible for not claiming in a particular insurance policy. Starting from 20%, your NCB can go up to 50% for not claiming for 5 consecutive years. Please note that this NCB or no claim bonus discount is applicable only on the own damage portion of the vehicle and not on the third party portion of the vehicle. This no claim bonus will be voided once the customer is making a claim. Let us imagine that there is an insurance policy of customer X and his own damage policy premium is rupees 20,000 rupees yearly. He enjoys a 50% discount by way of NCB and the net OD premium that he pays is only 10,000 rupees. Now let's say that he makes a claim on his insurance policy for his broken windshield for rupees 5,000. Now for his next renewal, he loses his 50% NCB eligibility and will have to pay the entire own damage premium. Motor insurance policies also give discounts for having installed anti-theft devices that are approved by ARAI. So the next time you're going for renewal of your insurance policy, check if your vehicle has an anti-theft device mechanism and go claim for your anti-theft discount as well. Insurance companies do not pay for the claims in full is a complaint that I always hear from many people. This is because insurance policies have a clause in it called applicable depreciation. Now let us try to understand what is depreciation. Package policies and comprehensive insurance policies apply a flat 50% depreciation on plastic and rubber parts. This application of depreciation is irrespective of the vehicle's age. Now let us assume that a person is claiming for his damaged bumper which is made out of plastic. Let us assume that the cost of the bumper is 10,000 rupees. The claim that he would be eligible would be 5,000 rupees, which is nothing but after applying this 50% depreciation. However, there is no depreciation that is applicable for glass parts. For example, if you are claiming for your broken windshield, there would be no depreciation applicable. Likewise, depreciation on fiberglass parts are 30%. And for metal and wooden parts, the depreciation applicable is based on the vehicle's age. For example, if you are having a car that is older than 5 years and within 10 years, the depreciation that would be applicable for your car's metal door would be 40%. So, if the cost of the door is 10,000 rupees, the amount that you would be eligible would be 6,000 rupees after depreciating for 4,000 rupees. Please note that there is no depreciation charges applicable on the labor cost of repairing the vehicle. So if the labor cost that you incurred for replacing the door of your car was 1,000 rupees, you would be eligible for the entire 1,000 rupees without application of any depreciation. Also, please be aware that there is something called compulsory deductible that is applicable on every claim that you make. For example, here as per this policy, there is an applicable compulsory deductible of rupees 1,000 if the customer is eligible for 10,000 rupees after applicable depreciations. The final amount that would be released to the customer would be 9,000 rupees after this 1,000 rupees deduction. Two-wheelers generally have an excess of 100 rupees and upwards, and private cars and commercial vehicles have anywhere between 500 and 2,500 rupees as excess. We talked about masala dosa. Now let us talk about butter masala dosa. A step above this comprehensive or package policy is the nil depreciation or enhancement policy, or which is commonly called as bumper to bumper policy. As insurance companies were facing a lot of customer issues due to this applicable depreciation, insurance companies came out with an innovative product called the nil depreciation policy. You can see from the insurance policy that is attached on the screen that the customer has paid an amount of 11,246 rupees for waiving off the depreciation that is applicable on the claims that he makes through his insurance policy. So by choosing to pay this nil depreciation waiver premium, the customer doesn't incur any depreciation on any of the parts, irrespective of it being rubber, metal, glass or wood. However, insurance companies have a restriction for giving these nil depreciation policies. Generally, what we have seen is that general insurance companies give away nil depreciation policies for vehicles that are within 3 years. However, some companies extend even up to 5 years or 7 years. As the market demand for innovative products are increasing day by day, insurance companies have come out with different add-on covers in the vehicle insurance market, like the return to invoice cover, NCB protection cover, engine protection cover, loss of contents cover, etc. I hope that you have got a basic idea of the framework of a motor insurance policy. If any doubts are still ringing in your mind, please feel free to leave it in the comment section below so that I can explain things to you. That's all for today's video about motor insurance. I'll be back soon with more videos. Thank you so much.